In fact, we did a deal last spring. We followed that company for 8 years before buying it.
Good morning, everyone. Today we're in London to meet with Klas Tikkanen. He is the Chief Operating Officer of Nordic Capital. We made a 35 million euro commitment in Nordic Capital's last LBO fund with Altara Global 2021. He's meeting with Louis Flamand. Let's kick off.
Good morning, Klas.
Morning.
Thank you very much for taking the time to meet with us today in your offices in London. Could you please first introduce yourself and explain your role at Nordic Capital?
Well, first of all, thank you for coming and thanks for having me in Paris in September. So I'm the Chief Operating Officer. I am running everything at Nordic except for the actual making of investments and owning of the companies, but all other functions. On top of that, I'm a part of our investment committees and our operating committees and our board of directors. I'm also one of the larger owners of the firm.
Could you please introduce your firm, Nordic Capital, and its history to us?
Yeah, we're the oldest private equity firm coming out of Sweden. We're founded in 1989. Our first 10 years of history was very much focused on corporate carve-outs. As you will know, Sweden has an unusual amount of large global corporates. We're talking about Volvo, Tetra Pak, Alfa Laval, based on a slew of industrialization about 100 years ago. And that has led Sweden to have one of the most vibrant and large private equity markets in Europe outside of the UK. So that was very much our first 10-year history. We were fairly alone the first few years, but we now have a host of peers across Scandinavia.
Could you please share with us the key lessons learned by Nordic Capital throughout its history and explain how those lessons learned have shaped the Nordic Capital of today?
I think our lessons learned come more from our successes than our failures, but of course we learn from issues as well. One key lessons learned have been that it's really good to have a deep operational and industrial focus. From the very early days of Nordic, we found that knowing the industry, knowing the companies, knowing how to run a company was really important. And mind you, this is early 90s where most buyout funds were very financial, much more focused on the transaction and on leverage and cash flows. But we had a board already back then of really strong CEO types that knew how to run companies. So that kind of operational heritage still shapes us. Today we have 18 operational professionals focusing just on owning the companies. Another lesson that came out of that was knowing and being specialized in the industries where you work is really important. We have the oldest private equity buyout sector team in the world. We founded a healthcare sector team in 1998. That is, as far as I understand, before anybody else. And we had a dedicated tech team founded in 2001, and so on and so forth. So deep specialization is really important to us.
And talking about specialization, then you mentioned healthcare, tech, but what are your key sectors of expertise today?
It's healthcare, it's tech, financial services, and industrials and business services. So four. But for us, we have over time kind of drifted more into looking at subsectors. Our main parts of healthcare we look at are medtech, pharma, healthcare services. We have an investment theme that is, I think, soon going to become a subsector in gene therapy and cell biologics. So we right now are operating as 16 subsectors, really, more than 4 sectors.
And today, so at Nordic Capital, who are your key investors? I mean, the key types of investors, and what is their average ticket?
Core investor base is very much European and American institutions, large institutions. So pension funds, insurance companies. And the average equity ticket, well, it's a fairly wide range, but I would say starting at 20 million euros up to several hundred million euros. And the actual average is 62.5 million euros in our latest fund.
Interesting. And what do you think differentiates Nordic Capital the most from other buyout managers?
First and foremost, it is our deep sector specialization. I think very few buyout managers have people focusing solely on pharma or solely on medtech. Only very, very large firms would come close to that. The second one is a very proactive approach to sourcing the investments. So on average, when we make an investment in funds 9, 10, and 11, the average time we follow that company and analyze the company is over 2 years. In fact, we did a deal last spring in Fund 11, Corpuls. It's a company that we'll talk about later, I think, that does resuscitation. So like for heart resuscitation, for breathing. We followed that company for 8 years before buying it. And I think these two things also interplay. The fact that we're very, very specialized gives us access to owners, to executives, to entrepreneurs that want to meet with us. They hear about us. They may not, for the moment, want to sell, but we're a partner that they start the dialogue with early. So that gives us access early. And by getting access early, we get deeper into the companies before they come to market, and we become even more knowledgeable and specialized. So I think we have a very interesting, virtuous feedback loop between specialization and getting early access and being proactive.
It makes a lot of sense. And I think at Altaroc, we firmly believe also that in a more and more competitive private equity environment, you need to be specialized to win deals and create more value. And I think we're also an Article 8 fund at Altaroc, and so ESG is very important for us, and ESG is also a key strength of your firm. Could you please elaborate on how ESG fits into your strategy and your value creation approach?
Well, being a Scandinavian originated firm, I think it's just the whole ESG and sustainability mindset is very firmly entrenched in the psyche of all of my colleagues. We've always been a responsible investor. If you go back and you look at investment cases, I've even go back and checked memos from the 90s, these type of topics were discussed. They weren't framed perhaps as ESG because nobody uses those words back then, but we've always been a sustainable type of investor. Having said that, now we work with it in a more formal way. We've developed a whole series of tools. We have a training program for all of our staff, all of our executives in the portfolio companies and their boards. And to date, we've trained almost 1,000 people in 3 different areas of sustainable investment and ownership. Having said that, though, I think it's also important to remember that ESG is one value creation tool. I think there are many value creation tools, and you need to have a very holistic view of a company.
And 2022 and 2023 were very successful years for your firm. Could you please summarize your key achievements over the last 2 years?
Yeah, I think the one key achievement I'm super proud of, partly because I was kind of leading the efforts up until that, was our fundraise last year of our 11th fund. Last year, as you will know, Lewis, 15 out of the 16 best or highest rated private equity firms were fundraising. 15 out of 16, so it was a very competitive market. And we were 3 that managed to close within 1 year, and we closed our fundraise in 9 months in a very competitive and difficult market. And that makes me especially proud since the market conditions were difficult. Like a lot of investors were putting their programs on pause. We had war in Ukraine, inflation going rampant. And for me, it's not just having money in the bank, which is, of course is really good now. It's good to have to be one of the few investors that have a lot of dry capital that we can actually deploy. But on top of that, it's a receipt. It's a final proof that we are a good firm. I mean, what goes into a successful fundraise? Well, you have to have good investment performance, which we have. You have to have a long history of good investor servicing. Your investors must like you, they must trust you. And I'm especially proud that they trusted you and others trusted us with the money going into such a complex environment. I think that's also a good testament to people believing in investment thesis and our investment ability. Yeah, beyond the fundraising, I'm also very proud that we this year have been able to do a couple of really good exits for our investors. We're in a very difficult market. Most private equity firms are having a hard time selling companies, but we have done 2 really good and successful exits this year, returning substantial capital to our investors.
Could you please elaborate on 2 of your latest buyout transactions? Maybe explain how you source them and zoom in on how Nordic Capital is creating value in these companies?
So I'll return to Corpuls that I mentioned earlier. So Corpuls is one of top 3, but I would argue the leader in advanced resuscitation equipment. We bought them last spring. It's a German company. The core product is more focused on ambulances and advanced care rather than these more simple devices you'll see in a restaurant or in an office. The equipment is very intelligent. So when an ambulance comes to the scene of a horrible accident, you can put equipment onto the patients, and that equipment will communicate with each other and with the hospital. So the hospital will already know how bad is it. And then there's also this monitoring and resuscitation. The sourcing of this deal came out of a project we did almost 10 years ago. One of their key competitors, Physiocontrol, was a company owned by Bain, and we were really interested. We worked on that project for 1.5 years. In the end, we never got fully comfortable, and we always liked Corpuls better. Obviously, when you look at a company like Physiocontrol, you will also look at all of the competitors. That's the key way of knowing what you're about to invest in. And having not really gotten there on price, that company was bought by Stryker later. We turned our attention to Corpuls instead. And that was the start of an 8-year process to buy it, courting their family. It was family owned by a German family, never had any material external investors. And yeah, it took us 8 years to get there. And our investment thesis is that this is the best technology in the market. And as is the case with many European firms, German, French, Swedish, they tend to have the best products, but that they tend to be beaten by the Americans on sales and marketing, right? So our investment thesis is to help this German company to reach its full potential, especially in the American market, through adding sales and marketing capability. And we have a long history of doing this, looking at one company, not quite getting comfortable or liking one of their competitors better. And then we, instead of just doing the easy thing, try to buy this company, we may walk away, or we price really low and don't get it, and then we try to get the other company. Another example is Clario, used to be called ERT. It's an American leader in subjective data capture, or capture of subjective data in clinical trials. So not your blood pressure or temperature, but how do you feel today, Lewis? Do you have nausea? That type of data in a clinical trial. The main competitor is CRF, and that was our project. We started it, we hunted it, we wanted to buy it, but in doing our due diligence, we kind of liked ERT, or now Clario, better, and end up buying that. I can give you 10 more examples of this.
If we move on to the market, generally speaking, what's your perspective on the current market environment? Do you think it's a good time to invest?
Super easy market, super easy to read. Yeah. No, it's a very tricky market, very difficult, but yes, we think it's a good time to invest. I think most times, people underestimate times to invest typically when things get tricky. I think it's usually useful to be earlier on the ball. You just need to know where to invest and how to price. The market is tricky. I think volatility has gone down, uncertainty has gone down. Our current market perspective is that we are in a sideways type of market. Got an updated perspective yesterday from our macro team, led by our CFO, where they look at risk premia, risk-free rates implicit in the market pricing. They look at how multiples develop over time. We have a fairly easy but still sophisticated macro model, and it comes out with sideways. We should not expect a dramatic rebound up, but we should not also expect a drop-off in the market. So yes, as such, I think then it is a good time to invest. I also think it's very important not to stay out of the market. History shows, and actually quite a bit of science shows, that it's very, very difficult to time markets. And history is full of investors who decided, now everything will drop off a cliff, I'll stay out. But if you look at it systematically, very few people, if any, pick the right time, other than by luck. So it's not a systematically sustainable strategy. The trick is rather, there's a huge shift in the market, we have geopolitical uncertainty, we have inflation spiking, now potentially coming down. Okay, how do I invest given this information? How do I price? We have responded to uncertainty in the past, and we continue to do so.
And you tend to focus on sectors that are quite cyclical in a way, focus on fundamental strengths, etc. So I guess that
Absolutely.
Even in the current market, I mean, it's easier when you focus on those sectors to deploy capital, isn't it?
100%.
Yeah.
I think maybe my statement would be different if we were investing in oil and gas or mining or something, but we don't, just to be clear. We are in healthcare, and within tech, we're in software. We're not in like manufacturing tech, but much more in various software segments. And in industrials, we're not in heavy manufacturing. We are in light, nimble, high-tech type of industrials manufacturing, and in business services. Both of those are much less cyclical.
How do you see the private equity market evolve over the medium to long term?
I think, and our firm thinks, that we're moving into kind of the era, the rise of private equity. People have said that is over, but I don't think it's over at all. I think the sources of private equity capital will shift a bit. Both McKinsey and Bain, in two different studies, forecast that the market will double or even treble in the next 5 to 6 years. But the source of capital is more likely going to come out of family offices, high net worth individuals, and even the retail market. I think that's where we're going to see the most growth of the sourcing of capital. And that additional sourcing will help us and others who have a big pipeline to continue to grow our deployment into private equity. And we have a big pipeline, as you know, Lewis, are currently active projects with a budget and a team working on something. We have 11 billion euros roughly of equity we could deploy if we deployed into all of that, which we won't. On top of that, we have a shadow portfolio, that is companies that we have a dialogue with. For example, Corpuls was in the shadow portfolio for 6 years, and then it was an active project for 2 years. And that shadow portfolio now adds up to 32 billion euros of potential investments. And with such a treasure trove of investments, we can afford to be really selective in picking what we believe are the true winners that we can then help continue to win or accelerate their path. But I also believe that with this pipeline, we could also grow our deployment. And I think we will, I hope and think that we will be one of the people benefiting from the continued growth of private equity.
Fantastic. Thank you very much, Klas. Thank you again for taking the time to speak with us, and thank you for sharing your insights on Nordic Capital and the private equity markets.
Well, thank you, Luz. Thanks for having me.